It all goes back to gold, people, and that's why gold is such an important part of the system. And most people, though, don't understand it. They think it's just a normal commodity like wheat or copper or oil. Sunday, January 11th, 2026, Monaco 64, home of alternative economics and contrarian views. Well, I've been asked many times over the years why gold is going up, and especially in the last year, well, gold was up like almost 65% in 2025. Silver, of course, was up almost 150, but we're going to focus on gold. And yes, today I'm going to tell you the underlying reason why gold is going up and why the dollar and all fiat currencies are sinking. And we're going to refer back to an article actually I wrote back in December of 2006 while still working in the city of London. I used to keep a blog called forsoundmoney.com, and nothing has changed. If anything, things are accelerating as we saw last year, and I think we're going to continue to see this year. And just quickly show you as well here. And this is only up until the end of April last year, but you can see how gold has performed well versus all the major currencies. The average is 10.2% per annum since the beginning of the century. Of course, there are some currencies that have done better than others, i.e., gold hasn't gone up as much versus these currencies, but the at the end of the spectrum, we've got the rupee. Well, it's losing 13% per annum this century. So you can see why Indians buy a lot of gold. The dollar has, well, is losing about 10.1% per annum. But what I want to do now, though, before we go and read my article from almost 20 years ago, is talk about what's going on in the natural resource space and how the world has changed completely in the last few years, especially since President Trump came into office for the second time. We're seeing tariffs, of course, related to copper that President Trump has imposed. We're seeing China impose restrictions on rare earth metals and even on silver. And yeah, and China has a huge stranglehold over these very strategic metals. And what we're going to look at today is copper, gold, lithium, uranium. And for the first time on this channel, we're going to look at a metal called moly or molybdenum. And these are five key minerals in this broken up, deglobalized world. And today's sponsor of this video, Vanguard Mining, its ticker, by the way, is UUUFF. And you can find the stock on Interactive Brokers, Schwab, Fidelity, and E-Trade in the US. Well, they have direct exposure to all these metals through their diversified portfolio. And yes, and more importantly, they are in US friendly jurisdictions, which is becoming something really, really important. Even Russia now realizes that as well with what happened in Venezuela and what Trump did there with Venezuela's oil, or is trying to do for that matter. And China as well, they've recently put restrictions on silver. And I think these metals and the properties we're going to look at today could be the next silver, i.e., we could see massive moves in these metals. Yeah, Vanguard Mining, I would say, is the first sponsor I've ever featured on the channel that is so wisely diversified in multiple regions and numerous metals. China has a basic stranglehold on lithium, copper, and molybdenum. And these, of course, are very strategic minerals for electrification, for AI, and for defense, especially molybdenum, as we'll see in a minute. So now we're going to look at the main reasons why Vanguard Mining is on my list. We're going to look at its projects and how they will help the West diversify and get control of the supply chain of these minerals. So the first project is a gold, copper, palladium exploration project in the Kamloops mining district in British Columbia. Second project is uranium. So energy independence is no longer just a talking point, it's a matter of national security. As the U.S. looks to decouple from foreign chains vulnerabilities, the mandate is clear: secure domestic and friendly jurisdiction uranium at any cost. And the real X factor isn't just policy, it's big tech. Companies like Amazon, Google, Microsoft are now bypassing traditional utilities to secure long-term power directly from nuclear reactors. Yet they need baseload power that is 24/7 and carbon free. There's only one source that fits that profile. It's uranium. So, and it's one of the reasons why we've identified Vanguard Mining. They control over 90,000 hectares in Paraguay's Paraná Basin, strategically located right next door to Uranium Energy Corp's world-class UT project. So the third project, lithium, right? Well, Argentine projects are key Western-friendly alternatives to dominant suppliers, and that's where the next project is. Vanguard has actually reclaimed 100% in the Positos 1 lithium salar project in Argentina for no cost whatsoever. Yes, they had sold this project to another company, and last year when you had the lithium winter, this company just gave up on the project for nothing. And back in when Vanguard had this project, the company was valued at one point at $80 million. Right now, the market cap of this company is just over 8 million US dollars. So you can see the potential here. Their high potential brine asset enhances Vanguard Mining Corp's portfolio, just as lithium prices rebound and M&A activity explodes past 8 billion in the sector. Positos One offers direct exposure to Argentina's world-class salars with exploration upside in a jurisdiction poised for massive output growth. And lastly, the copper and molybdenum property or project. Well, moly is not a consumer metal. It doesn't make the headlines, but it is indispensable. It strengthens steel, enables high temperature alloys, and is critical for pipelines, defense systems, aerospace, and energy infrastructure. Vanguard's copper molybdenum project is in British Columbia. It's the Redonda project. So Vanguard Mining's inclusion of molybdenum alongside gold, uranium, lithium, and copper makes it uniquely positioned. So as we wrap up here, as I always say, you need to do your own research and due diligence, and be aware that this is a highly speculative endeavor, and that you need to yeah, make sure you consider that before risking capital. So now let's go to my article about fiat currencies and how they're all sinking. Article from 20 years ago. As I said earlier, nothing's changed, and this will help you simplify and maybe also help you explain to friends, family, colleagues why gold is going up, right? So let's get on with my article here, and I'm going to share it with you. So here we go. They're all thinking, and there's my blog for soundmoney.com. Unfortunately, I don't have that blog anymore. Uh, December 18th, 2006. Um, and It says there has been a great deal of speculation over the last few years over when or whether the dollar will crash and burn. One thing many analysts, economists, and speculators have not taken into account is the fact that all other currencies on the planet are derived from the dollar. One has to go back to July 1944 to understand the nature of our present monetary system. That was when the major Allied nations gathered at the Mount Washington Hotel in Bretton Woods, New Hampshire, to draw up a new financial architecture that would become the new backbone of commerce and trade for the Allied nations after the end of World War II. The United States held over 50% of the official gold reserves in the world at the time. And with that in mind, the dollar was formally made into the reserve currency for the Western countries. It was decided that for every $35 foreign central banks held, they could receive 1 troy ounce of fine gold in exchange for it. Concurrently, fixed exchange rates between the US dollar and the allied countries' currencies were decided upon. As one can see, gold was at the base of this monetary system, and the exchange rates between the dollar and the other currencies were just a derivative of this system. And I would add that today's exchange rates, and I know the euro has been created, but even the euro, you can track it back to the old exchange rates. It all goes back to gold, people, and that's why gold is such an important part of the system. And most people, though, don't understand it. They think it's just a normal commodity like wheat or copper or oil, right? So what happened to the Bretton Woods system? Well, we'll see now. The Bretton Woods system ran smoothly up until the mid 60s, but the Vietnam War and the welfare state started to weigh on the system as Western governments thought they could spend money on guns and butter, and that somehow in the long term things would get better. Well, sounds familiar, doesn't it? Big, beautiful bill, 500 billion extra in military spending a year. So, as usual, governmental profligacy wrecked a monetary system with gold as an anchor, like the Bretton Woods system, stood in the way of the welfare state and also the warfare state, I would say. I would add that. That's my criticism of myself there. And politicians did not want to do away with the status quo. So here we go. By 1971, the US government had printed too much money to pay for the Vietnam War and Lyndon Johnson's Great Society. These new dollars being printed were not being backed by a corresponding amount of gold. Very simple. And as a result, foreign US creditors, foreign central banks, were demanding payment in gold. And this situation led to an unsustainable um, yeah, event, which led to basically a run on the US Treasury. So on August 15th, 1971, President Nixon, he basically shut the bank, right? Or shut the Treasury. And as a result, he closed the gold window. It was a default, right? Which meant foreign central banks and monetary authorities could no longer redeem their US dollar notes into gold. This act by President Nixon also led to the breakdown of the Bretton Woods system as the anchor of the system. Gold was abandoned. With the end of Bretton Woods system came also the end of fixed exchange rate monetary system. And as a result, the global monetary system, for the first time in modern times, had no standard of value for which to base itself on. So the fluctuations in the FX market every day really it's an abomination. It's just something that it's like changing the length of the inch or the meter every day, or changing how much a kilo or a pound is every second. It's ridiculous, right? So since 1971, the dollar and the rest of the world's currencies, they've been sinking because there's no anchor, right? And politicians abuse it and bankers abuse it. And gold has been rising. Purchasing power of the dollar and its fellow fiat currencies have also been steadily sinking since 1971. And from 1971 to 1980, the fiat currencies of the world sunk very quickly, and gold rose very fast. And I'm afraid we're in that kind of environment again, especially after what happened last year. Yeah, and the only way to save this fiat system was to allow short-term dollar rates to spike into the to the 20% level. That was Paul Volcker, right? This high interest rate scenario of 1980 saved the dollar, and as a result, all other fiat currencies. Gold, on the other hand, had risen in terms of dollars from 35 in 1971 to 875 by January 1980, and then started sinking for the next 21 years as confidence in the fiat money system remained in place. But as I note here, since 2001, the trend has changed and gold has been rising again, and the dollar and all the other major fiat currencies have started sinking, just like back in the 1970s. And I gave a list here of the major currencies and their performances versus gold since 2001. So you can see that the dollar was actually running ahead in terms of sinking with the yen. Gold was up 143% since the low in 2001. The euro is up 70.4, Swiss franc 77.5, and the pound 79.5. So here's my conclusion, and I still hold on to that conclusion, and I think we're still doing the same things, at least our political and monetary leaders. So it seems clear to us at For Sound Money that the only way to save the present monetary system would be for central banks and monetary authorities to let interest rates rise to their natural rates. The cost of such action would be disastrous to economic activity around the world. We know from past history that politicians would rather inflate than take the proper action to stem the destruction of their fiat currencies. So, yeah, I wrote this in December 2006. And yeah, of course, they didn't rein in rates, right? They went into the most gigantic and unprecedented project of cutting rates to zero, sometimes negative, and printing tens of trillions of dollars out of thin air. And yes, they kind of held a. So here's my conclusion, and it's interesting. So let's look at my conclusion from almost 20 years ago. I said it seems clear to us at For Sound Money that the only way to save the present monetary system would be for central banks and monetary authorities to let interest rates rise to their natural rates or levels. The cost of such action would be disastrous to economic activity around the world. We know from past history that politicians would rather inflate than take proper action to stem the destruction of their fiat currencies. So there you go. Uh, Unfortunately, yeah, we're continuing to sink all the major fiat currencies, dollar, all of them, and they're accelerating. That's what 2025 told us. And one day they'll drop to the bottom, and that's when, yeah, that's when you really need your gold and silver. In the meantime, hold on to it for dear life, or add on to your stack if you can. And with that, I'm going to wish you all a very good rest of the weekend. Take care. Bye.